Hello guys, welcome to our channel Market Wisdom. This time I'm giving a video after a long time. I was a little bit busy in the last week, so I could not give regular videos. So in today's video, I'm going to tell about the Opstra site. People keep on asking me on different forums that how to use this Opstra, and how we can make use of it during our intraday trading or even positional trading as well. So how we can make different possible things, how we can basically create strategies using this particular site. So we will see that now. So yeah, we have I'm able to log into the Opstra site successfully. And now, before starting the video, just one request: if you are not subscribed to our channel, you can please like, share, and subscribe, and you can share it with your friends and family members who are interested in trading. That will help me. And also, I have given my Telegram channel link in the description. You can make use of this. Okay. And for Opstra site as well, I'm giving the link in the description. You can make use of that as well. Okay, so let's start with today's video. What I generally do in this particular site. Okay, so I logged in. So first of all, what I generally look at is the open interest. Okay, so I comes into open interest, and in open interest I generally look for the Nifty and Bank Nifty different open interest in this particular page. So if you see over here, what it gives, so it gives us an option to select the expiry. So this is the Nifty, and this is the different expiries that we have. So I have selected this 17. By default 17th means the current week's expiry will be selected. You can select whatever expiry you want. Let's say we want to select this 24, that is February month monthly expiry. So if I select it, you can see over here this kind of structure bar, you can see over here, and how to read this particular graph. Okay, so open interest, this particular flow, this particular diagram or chart, it shows us what is the current open interest built up, or what we can say the current open interest levels it will show us. So right now the Nifty is at 17,350. Okay, last Friday ending it ended at 17,350, and you can see over here red and green color bars. Okay, so green color bars indicates call writing and red color bar indicates put writing. Okay. And this dotted line indicates where is the current Nifty level, that is 17,350. And if you see over here, in this side there are put writers. So the highest open interest on the put side is at 17,000, and below that it is at the 16,500. And if we look at the call writing side, 17,500 has the most call writers, and after that actually 18,000 call writers are more, and then the next open interest, highest open interest is at the 17,500. Okay, now what you will see, the next is change in open interest. So this is the change in open interest, means on that particular day what are the changes. Okay, so this is till now, means starting from let's say people started writing this particular expiry, let's say from 1st of February. Okay, so from 1st of February till today, how many currently open interest, means call writers are present, how many put writers are present. So that data is shown over here. Okay, but whereas change in open interest, this section shows us on that particular day's change in open interest. So if we want to read it, let's see, let's look at the 17,400 option. Okay, so what it is saying us, green bar is more over here than the red bar, and it is taller we can say, right? So 17,400 call writers accumulated on that particular day, on Friday. This data is Friday, right, as I said. So on Friday 17,400, if you see, call writers increased. Okay, call writing means what? Call writing means in short they have taken a, you can say, equivalent position like a put. Call writing means they are not expecting market to go up, and put writing means it's like taking a call kind of, but not exactly. But put writing means they are not expecting market to fall. So what we can see over here, green bar is higher in number, right? So it means more people are thinking 17,400 will not be broken on the upper side. So that's why they have written the calls. Okay, and this red bar indicator over here, which is higher than the green bar. So what it says, it says what they are thinking, whatever people shorted 17,300, they are thinking market will not go below 17,300. So that's the observation that we can come up. And what we can see, these red candles increased over here, it means those many positions got added. So if we see over here, this if we see 17,500, there we can see lot of means this huge green bar over here. It means on Friday 17,500 call writers increase. Means if a person keep on writing or added some position for 17,000 call 17,500 call option, if he has written that particular call, return means he sold that particular call, then that particular value is included in this particular bar. And if you see in this case, if the red indicator is on the downside, okay, red or green indicator, whatever, if it is on the downside, that it means those people have covered their position. Okay, so covered means what? If I am a trader and I have returned 17,500 put, okay, put return means what I have done, I have shorted the put. So let's say 17,500 put option on Friday morning, or before Thursday evening, it was at, let's say, 100, and I have returned, it means I have sold it at 100, let's say. And what happened on Friday? Market fall down, so 17,000 put 500 put option price might have increased. Let's say it went to 200, because market already reached 17,300, right, on that day. So the 17,500 put option, let's say price increased to 200. So as a writer, as a put writer, I will start seeing loss in my account. And writing means it's unlimited loss, right? Means if market goes very downside, take a very good dip in such a case, then I will be unlimited loss, right? So that's why what I will do in such a case, I will cover that position. I will take a exit from that particular position. And that's how the red indicator over here indicates so many people, like 17,600, 17,500, those put writers started thinking market will still go downside, so they exited from their position. And if you see over here in small, if you see very slight green bar over here, okay, what it means, 17,100 call writers, what they thought, they thought like market will bounce from here, so let's cover their call. Okay, so they have covered their calls over here, 17,100. So yeah, that is how we can basically interpret the market. And this Opstra site, I use it very much in a daytime, almost like I keep on following this particular site, because it gives me quite a nice representation. I can come to know easily that where is the open interest increasing, where is open interest decreasing, and all. This picture representation helps me. Okay, but if you see over here, this 15-minute delay, and it's under free plan. So if you are in the free plan, it will be 15-minute delay. If you purchase their plan, then it will be on time, or on regular basis. This graph keeps on updating. But yeah, I use generally paid version. Right now I logged in with the trial pack. Okay, so yeah, this is how we can use this Opstra site to get the open interest analysis. So let's see, let's take an example of any stock. Let's take example of Reliance, favorite stock. Okay, we will see what is the current open. So in case of stocks, we have monthly expiries, right, not the weekly. So you can see we can have 24th Feb and directly 31st March, not the weekly one. Okay, if you see over here, then we can see the things like see 2400 call, there is a huge call writing. And after that, the 2500 is another open interest which is high in number. And then 2600, so each 100 point there is a huge open interest on the call writing side. And on the downside, if we see 2400 has quite a good open interest on the put side. Then the next one is at 2300. Okay, and if we see on the Friday's action, then we can see over here these call writers, 2400 call writers, they have covered their position. They might thought Reliance will move up, so that's why they might have covered their position. So if you see over here, so many call writers covered their position starting from 2700, 2600, 2400, even in the money 2340, 2320, 2300. So those all covered their position, call writers as well as put writers. So if you see over here, 2380 put writers covered their position, even 2300. So they might be thinking Reliance will come down. So this is how open interest, or this is how positions are built up, and we can see and we can interpret it very easily. Okay, this is for Nifty and Reliance I have shown. Now in this particular site, we can else see, there is a PCR ratio. Okay, so PCR is very interesting thing. For Nifty, we generally look at it, right? So PCR we generally don't see anywhere. So PCR is very good thing that this site provides us. So if we see Nifty PCR, so it is currently at 1.25. so this is how I track it. We know that, right? Below 0.80 it is in the oversold territory, and above 1.60 or 1.80 it is overbought territory. But yeah, this is how I can see the put call ratio. I make use of this particular site to know the put call ratio. This is for Nifty. Let's say if we have for Bank Nifty, what's the PCR ratio? Yeah, it also have that is 1.0. But yeah, I generally look for Nifty only, not for any other stock. Yeah, this is about put call ratio. Mm, we have the FIR data as well, cash market derivatives, but I generally don't look at it. I look at it on the Nifty side, NSE side only. What other things? That portfolio. Okay, so in portfolio we can add a couple of strategies over here. So let's build one strategy. So in strategy builder, let's say I want to build one strategy. So right now, let's say market is in the downtrend, right? So we can add one strategy like I've shown you in the previous video, bear put spread and bear call spread, right? So that kind of strategies we have, we can make. I have given the link for that my previous video in the description. You can make use of that. So let's say I wanted to make one strategy. Right now market is in the downtrend, and we are seeing Ukraine issue, plus yield is going high, inflation data is coming very bad for US, and also market is in the downtrend right now. And if you are thinking market will go down here also, from here also, then what we can make a strategy is, let's say I wanted to create a strategy for put side, so that if market falls down I will get very good money in that. So for that, how I will create a strategy, like I will select options over here. I will select the expiry for which I want. Let's say I create for weekly. Okay, so I have selected this, and I will select the strike price. So what is the current level? 17,350, right? So what I will do, 17,200 call, I will add it over here. I will sell it. Okay, I will select buy sell. I will sell it. One call, I will select the price is 231. I will add position over here. Okay, and another thing is I will buy 17,300 call. Okay, bear call spread this strategy is, and I will add this position as well. So now what we will get to see over here, see what I get to see is how much margin is required for this. So this Opstra set gives you margin according to, like, different trading platforms. So generally this margin is almost same for all the trading platforms. So if you see, this is telling us what approximate margin is required. So 22,000 is the margin required. Then we'll see how to read this payoff chart, and this section over here, margin required is 22,000. Then break even levels it is also giving us. So break even level, it is telling us it is below 17,262 I will start getting money. Okay, that's what it is saying. Max risk to reward ratio, it is 1:2, 1.6. that is not bad, good thing. And on our capital, what is the maximum loss that we can get in this particular strategy is 1,800. Okay, that is 8% of our capital, and maximum profit that we will get is 3,100, that is 13%. And probability is I will say don't look at this probability, because if market close on, let's say, 17,200, then also I will get some profit, right? And in that case their probability wins. So this probability doesn't mean you will get 100% profit. So this is for 1 rupee profit also they are showing the probability. So for now probability you can ignore this one. Okay, so what this strategy is telling us, on 22,000 I will get 300 as a 3,000 as a max profit, and 1,800 as a maximum loss. And in this payoff chart, what I will see is, how I will read this one is, so market is at this place, right? 17,350 near about. If let's say market goes down, this chart will tell us how we will get in the profit. Okay, so let's say Nifty goes at the 17,290, then still we are in the loss. Okay, when we will get in profit, when Nifty goes below 17,260, 262, as this is showing us, right? 17,262. below that we'll start getting profit. Okay, so if market ended on the expiry day at 17,250, then I will be in the profit of 600. You can see over here P&L, that is, it is showing 600 as a profit. Okay, so this is according to the uh, expiry day. Okay, so if on the expiry day market closes at 17,250, then I will get 600 as a profit. Okay, and at the expiry day, let's say in tomorrow itself market fall to 17,200, then also I will be in the profit, but that will be around 3,000, because this 17,200 call option price will not become zero tomorrow itself, right? It will reduce, but I will not get 100% profit. This 3,100 profit is considering Nifty ended at that particular position on the expiry day. Okay, so of course, if Nifty goes below 17,200 on the expiry day only, this 17,200 call option will become zero, right? Not tomorrow itself. Okay, so if tomorrow also market goes to 1700, then also this 17,200 call option will have some value, let's say 5 or 10, but it will not go tomorrow zero. Okay, so that's how it is. This profit will be in case Nifty close below 17,200 or that particular level. Okay, and of course we can exit from the strategy if tomorrow itself we are getting the profit, right? If tomorrow from this strategy, if we are getting let's say 2,500 tomorrow itself, then we will not wait for the expiry day. I will suggest you can cover this strategy on Wednesday itself, because Wednesday we get a volatile market, right? So generally what people do, they create this kind of strategy on Thursday evening. They keep it like that only till Friday, Saturday, Sunday they eat the premium, and Monday, Tuesday automatically this premium comes almost half, and then they exit from the strategy. So from 22,000 capital, they generally get 2,000 or 1,500 or 2,000, then they exit. That's good amount over the weekend if someone is giving you, right, on capital of 22,000. So that's how they generally we work, like, right? So if we try to read out this payoff chart, then we can see below 17,196 we will be in a profit, and as I said, this is valid till expiry day. So that is how we can create different strategies. Let's say we want to create a risk-free strategy, iron fly or something like that. So what we can do is let's say we'll sell 17,200, okay, put option, and let's say I will sell it, will add position, okay, and 17,300 call option I will sell, okay, will add this position as well. So this is how something it will look like, and what it shows, this green indicates the profit area. Okay, if this particular strategy I take, then I will be in a profit until break even levels, that is 16,937, and on the upper side 17,563, and the maximum profit that I will get is 13,000, which is 9-10% of my total capital, 1,33,000. But this is not a hedge strategy. Generally we don't do like this. So what we do, we generally hedge this particular, because you can see the loss in this case is undefined, because if market, let's say, keeps on going down, then we will be in the loss, because one side is we have written a call and we haven't covered it. So in that case, what I will suggest, we can hedge that particular position. So let's say 17,000 put I buy. Okay, I go and buy over here. Okay, and what it will show like this something, and 17,300, 200, yeah, right, 17,500, 17,500. I will create different video for such strategy. Just I am trying to show you how to plot our chart and payoff chart, and how to save this one, and how to use basically this Opstra. Okay, so this is a very good strategy. In this we have limited loss, that is 3,000 loss at max. If we don't close also, then also we will be in a at max loss of 3,100, and at max profit of 6,800, which is 13% of my invested capital. Okay, so if you see how much margin it required, 51,000, and the break even levels for me are 17,063 on the downside and 17,400 on the upside. So this is how we can see the payoff chart for this particular strategy, and we can basically save this strategy. Okay, so if you want to do a paper trading and you don't want to enter actually in the market, and you want to try your hands and then only you want to enter, then you can save this strategy. So test strategy. Okay, I will save it. Okay, so this particular strategy is saved, and where to look it now? So what I will do, I will go to portfolio. In this portfolio I can see this strategy. Okay, so if I see over here, these are my options that I took, and if I want to analyze, I will analyze like this. I will click here and I will see. Okay, and if you want, let's say at the time of execution you took this particular option at, let's say, 52, you can adjust that price as well. Over here you can come here and you can 52, you can write the value as well, it will take that one. So this is how accordingly it will adjust the things over here. And let's say this 76 you got it at, let's say 60. Okay, so it will tell us. So see now, it has adjusted all the amounts, the break-even levels also, and the profit also increased in this case if we buy this at 60. So yeah, the basic thing that I wanted to tell is, this is how we can, use this Opstra site. You can make use of this save strategy, and you can paper trade also in this particular case. And yeah, that's how we can use it. If you have any questions, do let me know in the comments, and thanks for watching.